welcome. This is Mary Ellen McGonagle with your Friday afternoon MEM Edge show. And this is the show where we bring you where the action is in the broader markets. Quite an ending to a rather choppy week. So let's dive right in, take a look at what we're going to be covering today. As usual, we are going to take a look at where the markets closed for the week following today's pretty strong rally. Also, take a look at some of the top headline news that drove price action this week. And then also take a look at what the primary drivers are in the current market environment. Of course, a lot of us are fully aware economic data is being closely watched, interest rates. There are other factors as well that you may not be aware of that are driving those names that are having the biggest moves, certainly on days such as today. So we will get into that. Also, let's take a look at those news items that did impact the markets this past week. Federal Reserve with those FOMC meeting notes that were very closely examined. It was uncovered that not one of the Fed Reserve governors, as well as Fed Chair Powell, not one of them saw any kind of indication that we would see rate cuts into this year. And I certainly did not find that surprising, but it was a hit to the markets. That was on Wednesday. Also, we did see interest rates pull back. We'll get further into that as we move forward, but that was a bit of a green light for these growth stocks that, for the most part, have outperformed this week. Also, very critical employment information was released today. And in particular, we did see an increase in jobs. However, there was a slowdown in the growth of wages. And this particular part of that economic data today for December was the most impactful because this is something that Fed Chair Powell has been trying to reduce. This wage growth has in turn increased inflation as individuals are continuing to spend money. So that was the primary driver for today's rally in the markets to close the week on an up note. Also, we did get information relating to ISM Services Index, and this is a number that, of course, does in fact focus on that service part of the industry or part of the economy. That would be hospitality related, and it did post its first negative reading since the early pandemic. And for those of you not familiar, that ISM is the Institute of Supply Management. That number came in at 49.6. Any number below 50% is viewed as a contraction in the economy. So this is another data point that helped drive stocks higher today. So let's go ahead, take a look at those broader markets and see where did we close for the week. Of course, a lot going on. You do want to pay attention. You want to have these guideposts that are going to help you in your decision making. Certainly from my work, it will be momentum indicators, also these key moving averages. So let's take a look. This is today's 2.4% rally in the S&P. It did help push the index back up above the purple 21-day simple moving average. So we're right on the cusp of this 50-day, which is at 3,904. We closed at about 3,900. So we're right on the cusp of potentially breaking back above that 50-day simple moving average. Certainly would be constructive for the potential for a near-term bear market rally. Also looking at these momentum indicators, the RSI dipped up here into positive territory. This is good news. It had been languishing down here, certainly for the last 3 weeks below that net neutral. So good news there. Stochastic's not quite into positive territory. It's here at 49.5. We would need to see a break above that 50. Those of you that subscribe to my MEM Edge report will know that last weekend or on Monday, our report did go into detail as far as what to be on the lookout for in relative to a bear market rally and using historical precedent. versus a continuation of the declining phase that was there. So certainly things are shaping up. I will get more into that in my weekend report this Sunday, so stay tuned there. Let's go ahead and get a little bit further behind the broader markets. Take a look at some of these 11 sectors within the S&P 500. This is a 2-month daily price chart view. And what I've done is added an RSI, that's a relative strength indicator, sorted these ETFs in descending order. And the purpose here is twofold. One is you want to make sure that you are aware, where is that relative outperformance? Where is that strength currently taking shape so that you can in turn participate in it if you are inclined? And then also taking a look at sector rotation, because up here in this upper quartile are going to be your stronger sectors. Down here in this lower quartile are your weakest areas. But another point you do want to really pay attention to is rotation. Which groups are ascending from this lower quartile? Likewise, those groups that are falling out of favor that have been up here at the forefront. And this week, we are seeing some clear-cut rotation potentially taking shape. Now, 1 week is not going to make a market or a rotation. Ideally, you want to see a progression. So let's go ahead and take a look at some of these stronger sectors up here in the forefront. And for those of you that follow our show weekly, you will know that staples, healthcare, and also utilities had been up here at the forefront over during that last, certainly at least the last 3 to 4 weeks. The defensive areas very much front and center. So what we can see subsequent to last week's price action is staples still up here in the forefront, and staples are a bit of a hybrid. They are defensive in the sense that the underlying, a lot of the companies provide products that individuals need regardless of a potential recession, but there are also pockets of growth within staples, areas that are not entirely necessary. Think cosmetics and other areas that are seeing quite a bit in the way of growth. So that is remaining certainly up here in the forefront. But as we move forward, we can see utilities weakening, kind of descending from up that from that formerly strong area. And then surprisingly, healthcare down here, it was the worst performing sector for the week, down 0.2% relative to the S&P, up 1.5%. And a couple of reasons for that. There is that riskier biotech area that saw a bit in the way of weakening, but there are still definitely bright spots within healthcare. But certainly overall of note is the fact that that move into defensive areas is shuffling a bit. And then moving up here to the forefront, let's just take a quick look here at financials. This is XLF, and a pretty strong advance here that we've seen over the last certainly 2 weeks here, and it is now at that number one standing, if I may. So as we move forward, I'll share with you the strength in those financial areas, what is driving that particular movement. From here, let's go ahead and move on. And actually, we would be remiss to not take a look at some of these other weaker areas. So let's take a quick look here at consumer discretionary. XLY is the ticker symbol. Now, the group did fare well today. It was up 2.2 or 2.3%. So we can see that nice move. This is considered a growth area. So we can see that it is certainly, after today's price action, beginning to see some traction. So we're going to be keeping a very close eye on that. In the next segment, I'll share with you an underlying group that is also potentially on the move. Let's take a look at technology, another high growth area, almost a 3% rally today. But you can see overall, this is what had been taking shape in these growth areas. Definite downtrend, and then a bit of vibrancy today. Tech not quite ready for prime time yet, but you do want to have that watch list ready so that when that group comes into favor, you're well positioned to take advantage of that. So moving along, we're going to take a look at some sub-industry groupings. These are ETFs that I like to use, that I find very, very useful in, again, staying in front of where that strength is, and then from there, giving you that ability to capitalize on that and then likewise weaker areas. So up here in the forefront, this is another area that I highlighted at length in my Monday report for this week, and that is gold shares, GLD. Take a look at that big move. Certainly for the week in a nice confirmed uptrend, lots of reasons why gold and other commodity related stocks are on the move. Let's take a look at one potential reason, certainly today, and this is the US dollar. We can see the dollar peaked back here in October, has been in a declining phase, and it did dip again today. Of course, a lower dollar is positive for commodities, but there certainly are other drivers as well, inflation and otherwise, that are continuing to prop these commodities higher. Up here in the forefront here, this is certainly a rotation. This is semiconductor stocks that had been languishing down here in that weaker quartile. Let's take a look. Semiconductor stocks up almost 5%, well, 4.7 today. And as we move forward, I will get into why, but very bullish behavior here. RSI now heading up here above that 50. We are poised to see that MACD black line up through the red, which historically will and can signal a downtrend reversal in a given group. So that, for my work, is very exciting. I do tend to be drawn more toward these higher growth names because their returns can be and are quite a bit higher when they get going. So from here, let's take a look at some areas within tech. That was semiconductors. I talked about technology languishing overall, and one of the factors is IGV. This is the software ETF, and overall, it did underperform this week, down 0.7%, really stuck down here. One of the reasons we can see Microsoft actually was down 6%. I'll just take a minute here and we can take a quick look at Microsoft due to analyst downgrades to their growth prospects for the year. So take a look. Took a real hit for the week, but there are other reasons that software stocks are languishing, and a lot of it having to do with the growth prospects among that particular growth area. Other areas down here are, we can see Brent crude was off for the week, down. However, energy stocks, there were bright spots among the energy sector, certainly today, despite that fall off there, but Brent crude declining a bit for the week. Let's take a look at some other factors that we can key in on. And I do see that it is not listed here, so I'll go ahead and pull it up, and that is KRE. I do normally have that listed here. It is the ETF for the regional banking industry, and you can see that it had a nice 3% rally today. So this is one of the areas within financials that are on the move. You can see the momentum turning a bit positive up here, and then also, without showing it, but there is quite a bit of upside price movement in insurance stocks. So those are the two within financials. So from here, I did mention to you that software stocks had a very big move today. And let's go ahead and I'll share with you precisely one of the reasons why, and that is strong earnings from this smaller cap semiconductor company. This is AEHR. I pulled up that full quote to give you a little better information here. You can do that for any of these stocks down here. Just use this link here, check on to that full quote, and it will give you information such as their market cap, the sector, and then the industry group that they are a part of. So AEHR came out with stellar earnings today, up 33, almost 34%. It was up 40% at one point before pulling back into the close. Super high volume, all about the company coming out with incredible earnings. Their revenue numbers, 54% year over year. And they do one thing that's very important in this semiconductor space, something I'm very tuned into, is the fact that there are 3 sub-industry groupings within semiconductor stocks. The group overall only has about 100, if that many, stocks that are in it. It's a very Tough industry to enter, high barriers to entry. So you do have a relatively small pool to choose from when looking at semis. However, 3 sub-industry groupings are comprised within that, and that's using the O'Neill methodology. I do use Market Smith as for my screening when trying to really fine-tune where the strength is. And AEHR happens to be, it says test systems. They do a lot with EV testing, and if you were to take a look at those semiconductor stocks that really outperformed the most today, they were in that equipment space. And I do have 3 names from that grouping in my watch list, on my watch list, because you will want to pay attention. They are not producers of chips. Chip producers are having a little bit of a tougher time with supply demand issues, but these equipment guys, certainly after today's price action, are faring a bit better. So let's take a look at another. So in addition to earnings, we are continuing to see earnings as a driver. And this is something I like to see from my work. Again, earnings are going to be that primary driver, certainly in healthy markets. So on a day like today, if you were to look at those biggest performers, they were companies that either had come out with strong earnings recently, have come out with strong earnings. Also, their prospects are positive. And this is unlike other rally days where there's been a lot in the way of bottom fishing among these really down and out stocks. And I view it as constructive that there are sound reasons for these companies that have experienced the biggest gains today. So I'm just going to share with you a very quick screen here. This is FinViz, available certainly to the public. One screen that I wanted to kind of underscore what took shape today. Now, we don't know if it'll carry through into next week, but something I found very interesting is for instance, if you take a look at those companies that received analyst upgrades before the open today, and there weren't that many. So I'm just going to go ahead and pull up the list here and take a look. Each of these companies came in with returns today that were well above the average for the broader market indices. But even more importantly, so what I did want to point out first off is the fact that analyst upgrades are having an impact as we go into earnings season, which will start in less than 2 weeks. So you do want to pay attention, have this list similar to this on hand. From here, we can sort this group by market cap, and you will see that even these bigger cap names up here did have very decent rally days on those analyst upgrades. Another thing that you can do, or another screen sorting that can be done when you are viewing these analyst upgrades and you are seeing this pronounced upside move, is take a look at that industry group. Is there a sector or industry group that is being favored? And immediately you can see today that it was solar stocks. There were several, at least CSIQ, FSLR, did have analyst upgrades today to their outlook that really helped spur movement there. And it's all about keeping an eye on that. Is that move into that particular sector, will it gain traction and continue? So also when looking at moves in names today, stocks that had rallies certainly better than the broader markets, we can also look at news, bullish news. And in this case, taking a look here at Costco, up 7.3% on the day, all about the company's December sales numbers that were quite positive. It in turn did push the stock up. Now, is it ready for prime time? Well, it's going to really have a lot to do with your approach to investing, but I'm going to share with you what I'm seeing in Costco here as an example. So we can see that RSI now did turn positive. That's good news there. We did break up above this 21-day super big volume. We closed the day in the upper reaches of its trading range. That's bullish. And we are now poised to have that black line up through the red, which would indicate that this downtrend is over. I would like to see a more pronounced MACD crossover here. And then also you're going to want to pay attention to how the stock behaves at this 50-day simple moving average. That's at 491. That's your next area of possible upside resistance. But net, we do have bullish technical price action taking shape here in Costco after today's rally. But even more importantly is that fact that we are seeing vibrancy among analyst upgrades, in news that sales are going higher. And then from there, we did see movement into other big discount retailers. So the other area that I did want to share with you is this grouping and list that I have been really paying close attention to. This is another example of the importance of having a watch list of stocks so that you can, on days such as today, stay on top of particular areas that are seeing vibrancy. We saw Costco. Let's take a look at Ross stores experiencing a nice base breakout today. We can see that MACD crossover shaping up, looking quite constructive. Another name here that we can take a look at is Walmart. It did break back above each of these moving averages, nice upside momentum on that RSI, MACD crossover taking place. So nice dynamics there as well. And then DLTR. Now, for those of you not familiar, these Dollar Tree does not look particularly compelling to me, certainly compared to the other names. We have a lot more in the way of upside resistance here and then overhead supply. But these names are among those stocks that are part of what I'm calling my recession list. These stocks were each names that were up in 2008 while the broader markets were down over 30%. These names were up 24% plus. So here's Amgen. This was all about news today relating to Alzheimer drug advances. And you can see it traded just up to this 50-day simple moving average. But we are seeing interesting movement here. A break above that 50 would be quite constructive for the stock. So one last area that I did want to share with you, and I did mention to you the fact that those companies that came in with strong earnings last quarter and have held up well. This is another very vibrant watch list for me that I am paying close attention to, but many of the names on that watch list had very, very good moves today. So back again to Ross Stores. This is the gap up on the release of the company's earnings. And what I wanted to share with you is what has taken shape since then. I have about 20 plus names that have experienced this same type of price action where it has had a big gap up on strong earnings and then has in essence retained a trading range throughout this time period. Of interest to me is the fact that while the broader markets have really suffered and waffled, you can see that the dynamics, certainly momentum here on that RSI and that MACD have remained in positive territory. So this is, I was in anticipation that when growth stocks came back into favor, these would tend to be your biggest or bigger movers because they already have that dynamic in the way of growth, management guiding higher, and positive technical momentum. So from here, I do have a few more names that I can share with you as we move forward. And they are not all in that discount retail space. Let's take a look at some of these other companies that reported earnings earlier, certainly their most recent quarter. So here we are with URI. This is that gap up on earnings. And we can see that United Rentals advanced a little bit further. But again, that back and fill price action here, quite choppy, but the momentum indicators did retain a positive presence. This is unlike many, many other stocks that, of course, have been under selling pressure. And then we can see that the momentum is potentially shifting on this nice rally. Let's take a look at an insurance stock. I talked about that being a vibrant area among financials. This is Travelers. The company came out with strong earnings in October, had a significant advance. This was that October into November rally period. And then again, more of a back and fill. The momentum RSI did mostly stay in positive territory, but here we are with a gap up rally and positive momentum taking shape. Another big earnings winner last quarter that held in. I think you're getting hopefully the theme here. This is Hologic, HOLX, gap up, big volume, strong earnings, held in back and fill and is potentially poised to have some nice upward movement there. So I would say keep an eye out on that name. So from here, there are other companies that are not, they did also come out with strong numbers. Here's a gap up on O'Reilly Automotive, but not quite ready for prime time, but certainly still remaining on my watch list. Some other areas that we can take a look at. I did mention to you that gold stocks were on the move. What we can do from here is go ahead over to StockCharts.com, and I'll share with you a very quick and easy way that you can get in front of those names in a given group that have the most constructive charts. So here we are with XLB, the materials sector. That's where these gold stocks will be housed. And what we can do from here is go ahead and take a look at some of these gold mining stocks, as a for instance. And from here, you can go ahead and sort that group by this StockCharts technical rating. In other words, these are your most constructive charts. From my work, I am going to be more drawn toward at least mid-cap names, if not larger. This is HOLX mining, positive, constructive uptrend taking shape there. And you can see that there is vibrancy among these smaller names, but I will tell you that they are going to be a little bit more volatile. From here, we can just take a quick look here at the mining stocks in general. And then from here, I will share with you another area that is benefiting from the upward movement in some of these gold stocks. So again, keying in on stocks that are a little bit larger in market cap. This is BHP Group, gap up today into a base breakout. You can see that momentum shift here. Nice high volume over the last 3 days in an otherwise lower volume, barring today. And then one last name we can take a look at here is Rio Tinto PLC. Of course, it's an overseas company, but also experiencing that gap up on big volume. So that's an excellent way to then get in front of those names in that basic materials commodity space. From here, last up, I'm going to share with you a company that is certainly very well known, and that is Caterpillar, CAT, another company, gap up, strong earnings, back and fill price action, and then a move to new highs. And among other, they are involved in very heavy construction, but also in that mining space. So improvement in pricing of those metals will improve certainly the outlook for the use of their heavy machinery used in mining. I'm going to leave it at that, everyone. If you have not already, use that link below. You can trial my MEM Edge report for 4 weeks for a very nominal fee. It comes out twice a week, and I hope you have a wonderful weekend. See you next week.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.